Hey, welcome to Your Money and Real Estate. Welcome to Your Money and Real Estate. My name is Mark Vasilius, and today's show, I always say it's a special show, but today I'm telling you how different it's going to be. I'm going to start off by explaining what today's show is by answering or by showing you the 10 questions that we're going to cover, so that everyone who's watching this is going to know is the reason why you're going to stay tuned. So today's show is going to be about private lending and mortgages. We're going to explain the differences between the exempt market dealer and private mortgages. We're going to explain how these private mortgages are secured. We're going to explain who is eligible, what is eligible. We're going to go through what regulatory body governs the mortgage industry. We're going to go through so that you can learn how to become a bank and how do banks make money. Number 6 is what are the different types of mortgages we're going to discuss. We're going to explain the term which is extremely important called LTV, which is also loan to value. We're going to take a deal actually from start to finish, so you're going to fully understand private lending. And we're also going to explain what is a syndicate and how is it different than a regular mortgage. And number 10 is how and what is the due diligence process that goes behind these projects. All those 10 questions are going to be zoomed in on my very special guest, Miss Carmen Campagnaro.
Hello.
Thank you so much for coming to the show.
Well, thank you for having me.
And this is probably one of the most organized shows we've done. I was explaining that, you came in and you said, Mark, I want to do this, I want to do this, I want to do this. And I went, wow, This guest is prepared. Yeah. So I figured that would be the best way to approach this, is to say, because sometimes we can wander. But we're definitely going to go through all these points. So anyone watching as well, you can immediately start calling us. This is a call-in show. It's 1-866-715-1010, and we're open for your calls. And Carmen, tell me, how did you get into the private lending business? And I guess the word is what made you an expert? I'm sure there's a story, and I got to admit, I love stories. Okay. So tell me a story.
Well, I've been in the business now for, I think it's about 17 years. So I've been actually focused on financing real estate investors' requirements for condos, apartment buildings, commercial, that type of thing. And in the last 5 years, I've noticed that the banks have been really tightening up. And every couple of years, there's a new rule coming into play.
Why is that, though?
Well, I have my own opinion, and I'll keep it at that right now. But
can I express my opinion?
Sure.
I think it started with the U.S. meltdown.
Yes.
And everyone getting really scared. And today, very appropriately, is the U.S. again is putting us on the fiscal edge by not approving their debt ceiling. Yeah. But that is, in other words, when the U.S. sneezes, the world feels it. Is there a connection in there, you think?
I would agree, but at the same time, I think there's a lot more detail behind the different types of rules that have been imposed on us. Okay. So for a mortgage broker today in the industry, I really feel for the ones that are catering to real estate purchases for home buyers and things like this. So anyone that's self-employed, anybody that is trying to buy an income property and cannot confirm income, they've restricted so many rules. So this is a huge door that has been opened for us in private lending. It's incredible the amount of money people can actually make with private lending. And I decided to take that path prior to all of this coming to play.
Now, how did you end up in private lending? Because it's not something you just wake up and go, hey, I'm going to be a private lender.
Yeah, no, we've always done it because we've seen the need for investors. When they were purchasing their income properties, they always needed a top up on a second mortgage. So I was already dabbling in private money quite a bit at the very beginning. Okay. And as we got further into the business and our deal flow became larger, there was a lot more requirement for private money. So that kind of started to develop that way. And then in the last 5 years, we decided the company's decision was to really go private money completely, because it's a lot easier to facilitate, and we can actually get a deal done without confirmation of income. If there's challenged credit, there is still a way to get it done. So this was I think it was a lot more feasible to work in the industry this way. So that's why we decided to go that way.
So Pro Funds Mortgages, even though you kind of started like most mortgage companies, residential and things, you've really, really honed it into a very, very particular type of niche.
Yes, yes. Okay.
And that is because of demand, or?
We were catering to real estate investors. I mean, we do refinances and single home owner-occupied type properties, but the majority of it is for an investor. And in that case, people were needing that private money. And then when the banks tightened up, that's when we started to go right into the private money.
Got it.
And so we were actually outsourcing our funds with larger private lenders in the industry.
Okay.
And, you know, and there's only so many of those guys that you can work with. And we decided to then start working with our own investors because we have a huge database of people that we've been working with over the years. And the fact that it's RSP eligible and so on, and we're going to go through your 10
Sure,
points, so I
I'm
don't want
gonna-
to discuss it
No,
now and
that's
then ruin
okay.
those things there. But
I'll do a check mark as we answer them because I'll be very specific about that.
you know,
but-
so there were so many options for individuals to actually utilize or have access to their own funds and leverage the huge returns that they can get. So we started to develop that and started to market to our own clients, and we've developed a huge pool of funds. And this way now, so we've gained the reputation in the industry for being known to have access to private money.
Okay.
And that's how it all kind of came into play. So in the last 3 years, it's been so obvious that the banks are not financing it. Everybody's been faced with this. It's not just the brokers that cannot facilitate.
And that leads to a question that's not on my list, but why would someone come to you and get private lending? You know, like, is it strictly because the banks? I don't know that, you know, people ask it, well, you know, where is there a market? Why can't I just go to a bank?
Yeah, well, they can go to the banks, but if you are self-employed today, okay, the largest problem right now is that if you do not show income on your notice of assessment, if it is not verifiable, you will not get a mortgage on a rental property. They will not approve the deal. There are B-type lenders that will do it,
Okay.
But they're limited to 65, maybe 75% maximum. So they're restricted to what they're lending on. And a lot of the investors that I work with are trying to maybe borrow a little more because the property can carry it or it's worth the investment for them. So they'll spend that extra money on private money to top it up to maybe 85%.
Okay.
And at least now they're in with 10 to 15, right? 15% most of the time. Some lenders will approve a 90%, up to 90%.
You know, you're talking 90%, 85%. I know what
Yes.
that is. Let's
Yes.
check off question number 7, which is explain LTV. LTV, loan to values. Us in the industry, we all know what they are, but you're talking 85, 90s. Get into the heart of that. What does that
Okay.
mean and why is it so important?
Well, how it works is this, that it is the actual loan that you're going to get
Okay.
to the value of the property. Okay, so when you're purchasing a property, the institutions out there, they'll lend on the appraised value or the purchase price, whichever is less.
Okay.
Okay, so that is their loan to value on the purchase price or the appraised value, whichever is less. So when you come into private lending, there are private lenders. So for example, if you're buying a property for $100,000,
Okay.
a bank or a lender may only go for 75%, okay, of that 100, but it's actually worth, let's say, 150,000. Well, we have lenders that would actually consider the value on completion. Okay, so that means that an investor can get in with less money, gives them the ability to use that money and buy other real estate. So it gives them it opens the doors for them. Period.
Okay, so the loan to value, though, from a private lending perspective, is important that you fully understand. You know, you use the word top ups, you use the words, you know, edging up. So it's almost like the loan to value. When people say we won't go above LTVs of 80%, that means you'll always have 20% less left for equity, for security, and things like that.
Correct.
Okay.
Correct.
Okay.
So loan to value means basically the loan, the total loan that you are getting against the value of the real estate.
Okay.
Okay, so that's where that would come into play.
I want to mention too, being involved in the development as well. That can you explain how loan to values in the construction process, how that is graduated? That the money isn't released until loan to values
Yeah.
are achieved.
Yeah, and that's a lot more complicated when you get into development type stuff. So I'll first talk about, I'll get into that in a second.
I know I added that question.
No, you did. But I want to also mention that there could be, you know, a need for somebody, for example, they're buying a duplex, for example.
Right.
And it's vacant and it needs a lot of work, but they're getting a steal of a deal.
Okay.
So my client or my lenders will come in, our lenders will come in and actually lend on that property when a bank won't even touch it with a 10-foot pole.
Right.
Okay, granted, you're going to be paying a higher interest rate, 8 to 10% on a first mortgage, interest only, plus fees, but it's the cost of doing that deal. And if you do your numbers at the end of the day and you can actually make 20, 30, 40, 50,000, 100,000, whatever it is, then it's so worth using that money.
And especially since you can get stuff under 30 days.
Absolutely. You can close I can get a deal funded and closed within 48 hours.
1-866-715-1010 is the phone number. I'm sure some of you out there have questions on private lending. Maybe you have a deal out there that you need to get financed, but Carmen is the lady to talk about. Okay, so Carmen, I think we've answered question number one about loan to values and how and why. An understanding of this is probably a foundational thing, because that word LTV is kicked around a lot.
Yes, it is kicked around a lot. So, this is why I wanted to actually do this, because these are commonly asked questions. When I get a phone call, which I go through every day, a dozen times to speak to new investors or new people that are looking to get into lending.
Sure.
This is the common questions that they ask, and I thought this would be such a great thing to target every one of them, and then at least people can understand clearly, okay, that's how we do it.
Right.
Right, and how actually you can get into it, and it's not easy. It's a passive investment, and the returns are significant, and if more people knew about this, it'd open a huge market of private money.
Well, this is not one of the questions, but why is there seems to be, I guess, a fear when you say, well, we're private lending, we're using the words, you're just like a bank. Where does this kind of fear come from? Because it seems like, well, no, I'm going to deal with a big institution. Boy, if I call Carmen, how am I protected, kind of thing? And I know that's part of the question, but
it might be, yeah. And what the difference is, or I think where everything kind of, the stigma came from all of this, is when people back in the day, 10, 20 years ago, 30 years ago, would go to private lending, they would only go there because it's the last resort, okay? And it's always expensive, think of loan sharks. It's not like that anymore. When people lend to those type of things, they're usually lending to people that have challenged situations, like they have really challenged credit, they're bankrupt, or their mortgage is in default. That means they haven't made their mortgage payments, they're in arrears, they're going to go into power of sale, tax arrears, all that kind of stuff. And that's what usually private money was used for, and that's why the high yielding rates were dictated.
Sure.
But our direction in our company, and we've been with investors from day one, and our direction to our fund placements are with real estate investors. We're not dealing with that. I don't even want to see those type of deals.
So you're dealing with sophisticated guys that fully understand what they're investing in.
Well, and some might not be so sophisticated, but at the same time, they may have really good credit. Most of them do. They have some money to work with because they're investing. And, they're buying income-producing properties and making a go of the flip. So our defaults on our mortgages are very, very low. I mean, we put out, I don't know how many $1 million a year, and I've had, I'll tell you, one in the last 5. So
I think you're touching on something that I certainly experience, is that pretty much after the 4th property, for people buying investment properties, that suddenly the bank isn't that interested in talking to you anymore because they're starting to get a little bit nervous. Now, either you go to another bank, but again, we're talking about professional investors, and I'm sure some of you out there are watching are that, and that you do require a more sophisticated structure to finance your deals, because after 4 or 5, and a lot of my guests, man, some of them have 30, 40, 50 properties. How do you get financing for properties like that? And that's all you do is investing. And suddenly the bank says, hey, you don't have a job. Well, I own 50 properties. Well, still, you don't have a job.
Yeah, it's horrible. And they've made it even more challenging with Faraday's mortgage rules, right, that have come out. And I'm not saying it's good or bad. All I'm saying is that I'm happy because it's opened a door for private money, and it's a lot easier to facilitate. And you know what, I use private money myself for my real estate. I'm an investor. I love real estate, and I use it all the time. It's beneficial for me all the time. And there's several different scenarios that we can maybe go through. I don't know if we're going to have time today, but
so many questions.
Some other deals that I've done that have been phenomenal, which allowed me to get in on investment properties with virtually no money or little money. And I don't promote the no money down thing. That's not what I'm about.
Totally get it.
I'm not about that, but when you can have an opportunity where you can take advantage of something like that, there's so much more room with private money. Right? And it caters to people that are self-employed and all of that. That's the type of people we deal with.
Right.
And that's why our position is a lot stronger than what you would see generally in the market.
Carmen, we've only answered one question, but we're going to probably get into how banks are secured and all the other 9 questions when we'll be right back on Your Money in Real Estate. Don't go away. We're not going to use the slides until the third section. Okay.
This one we're going to go.
Welcome back to Your Money in Real Estate. To me, it's a special show because I've got 10 questions that I have to go through. This is how organized and sophisticated my guest is. Carmen Campagnaro is with me. And during the break, we had like 3 seconds to just catch our breath because I think we're going to go through, there's so many questions we have to answer. I think we're going to start with question number 1 because we talked about this and you said, listen, there's a lot of viewers out there that are investing in stocks, bonds, and all kinds of investments.
Yes.
And what we run up against is what is the difference between an exempt market dealer and a private mortgage? Let's get through that question first.
Let's get through that one, yeah. Well, if you are lending to an exempt market dealer, an EMD, or any of these other investment type opportunities that are presented.
Can you explain a little bit about like the exempt market? Like, is that mining stocks? Is that other real estate stuff?
Well, there's a wide range of different companies that offer this type of a capital raise. So what they do is they raise capital for a company that is investing in. It could be another company. It could be a real estate asset. It could be a development project. It could be many different things. However, the difference is that you are not actually being registered on the mortgage. You do not get a mortgage. You are handing your funds to the company itself. And that is the difference for me. I personally, I don't feel that secure. I don't have security. Now, I'm sure, and I'm not saying that they're not good companies. I'm sure there's a lot of good ones and they've had great success rates. However, for me, knowing the fact that when I'm handing my funds over, it is actually being registered on a tangible asset. It's bricks and mortar.
Right.
It is there. You can touch it, feel it. And that to me makes me feel a lot more comfortable. Okay.
And I know that in the exempt market world, there's things called offering memorandums or OMs. So they basically explain the deal. In the mortgage industry, I believe it's called a mortgage investment offering.
Well, yes.
Which is, are they similar? Are they the same thing or?
Well, we've created something called a MIO. Okay. Right. I don't think everybody else in the industry has it, but we do quite a bit of this. So we've established this mortgage investment offering, and what that is it basically it's very similar to an offering memorandum.
Okay, I don't mean to cut you off, but whenever we do have a caller, I always like to take them. Annette, hi, you're on Your Money in Real Estate. How are you?
I'm fine, thank you.
What's your question?
Well, I don't know if this pertains to what you're all talking about, but I was quite interested when I was hearing this. I'm a single mom, and I've been trying to get into the house market for a long, long time, meaning just a personal house for myself. And the problem is that at one time, banks would look at a one-income family to lend to. Now they don't do that anymore. You basically need 2 incomes coming in. Absolutely. Meanwhile, I'm in a position, I don't have a whole lot money to put down, but I'm in the position that I can carry a mortgage, especially if I got an income property. Let's say I could rent out, get roommates or whatever, a basement apartment kind of thing. But yet, I never seem to qualify. I was wondering, is there any options for someone like me who's just dying to get back into a home?
Sure.
Look into the camera. Yeah, absolutely. There would be. It would depend also on credit, how much down payment you have, those type of things, and the location of the property. However, we would be able to arrange perhaps a first mortgage with maybe a B-type lender, and the rates might be a little higher, but it is something that we could do, and we do quite a bit of that. So we could get up to 90% depending on, again, the credit and the whole scenario, where the property is located.
Well, I have an excellent credit.
Pardon me?
I have an excellent credit.
Well, then you know what? Absolutely, there should be no reason why we couldn't assist.
Then you should, Annette, you should give Carmen a call, because I think the important thing is, and I certainly stress this a lot, is get in the game, and then after a year or so, once you sort of have proven yourself, believe me, then the banks will come saying, hey, all of a sudden they're going to want to finance. So I think, Carmen, what you're suggesting is, we can certainly probably assist. I would say get in there.
Between a first and a second, there's definitely a way we could do this.
Okay.
Annette,
so is your number going to get flashed on, or
I could give you our number. It's 1-888.
Yes.
330.
330.
3866.
3868.
3866.
Thank you very much.
Oh, thank you. I look forward to hearing from you.
I will definitely call you. Thank you.
Annette, thank you so much for the question. And I just want to say that you're the exact kind of viewers I like, that they call, they're interested in real estate, they want to know more, they want to get into it, because I personally believe in that kind of thing. So, Annette, thank you so much. So, that's excellent. So, we were talking about the exempt marketing and sort of how the differences between private lending and and I know in the public markets they have a thing called a prospectus. So before you invest in a stock, you would get a prospectus. In the exempt market, you talk about offering memorandums, and then with private mortgages, you get in a mortgage. It's there's similar things where you have to basically go through it before you sign it. Is that correct? So there's a full due diligence.
Absolutely. When we have now, that depends, Mark, because there's two types of mortgage packages that we have. We have when we do a capital raise for a larger development project, and when we are doing perhaps a mortgage like we were just talking about right now, where somebody's requiring a second mortgage of maybe 20, 30, 40, 50, 100,000, 200,000, we would have individual lenders themselves that would cater to that type of an investment. So our company would provide the due diligence. So we would acquire all the information, appraisals, agreements of purchase and sales, depending on the deal, credit, income, all of that. We would assess the deal, and then we would package it and send it out to our investors. And we get a lot of that, so there's the ability to really move people's money. So there's never a shortage of money or deals.
Okay, so to wrap up then, if I heard you correctly, Carmen, the difference between an exempt market, alternative market product, and a mortgage is what you called
security,
bricks and mortars.
Yes.
Whereas with the exempts, you're buying a share in a corporation. There's different. There are different way it's structured, but with a mortgage, it's pretty clear. Your money is going registered on title.
Another thing is that when you're dealing with funding or an investment opportunity like this through an EMD, the return on your investment is contingent on the success of the project. Okay, where a mortgage, it's a fixed return.
Right.
And that does not sway. So if that's written on title, it's all done legally.
You know how much money you're getting before you walk in.
This is your fixed return. So if we say 16% is your return on your investment, that's what you're getting.
Wow.
Even if let's say, for example, it doesn't work out for the investor or the developer, that's not your problem as a lender. That's your return, period.
Okay.
Yeah.
Carmen, I can safely say we've answered that question now, which actually segues us into how is it secured. We were talking about that, but you out in the hallway there, you were mentioning flow through, you were mentioning registration. How is it better than that? I mean, we touched a bit on that. Am I missing any points in there at all, or?
How it's better is the fact that it's registered on title. Okay. Right, and you actually have a charge on the real estate.
Right.
So and the fixed returns.
So if anything happens, anything goes wrong, you're going to be paid out first. That's how the security works.
Yes.
Okay.
Yes.
So that's how it's secured. Again, this is a call-in show. 1-866-715-1010 is the number, and we're touching on hugely important questions, which is private lending in the mortgage industry. So, third question is eligibility. Now, this one I've talked a lot about.
Yes.
Why don't you tell us who is eligible to use their money for private lending?
Okay. Well, you do not need to be an accredited investor. Okay.
And that ties into what we just talked about.
Yes. Yes.
The exempt markets.
When you get into these other types of investments, okay, first of all, the minimum investment I think is $150,000. Okay, and you have to be an accredited investor.
What does that mean?
Well, and you know what? This is a very good question. I don't have the outline of what it is, but there has to be a certain income generated in the family unit.
Million.
Is it $1 million?
It's $1
okay,
million.
so you would know better than
I would.
I've actually looked it up. And I'm not heavily into that side because I don't believe in it. So I haven't really gotten into that too much.
Then I'll help you. I'll help you out with that. If you can't prove that you have $1 million of net worth, then you have to have a minimum of 150,000.
Okay. Yeah.
So if you do have a $1 million net worth, then you can invest less than 150,000. So
Okay,
a lot
I
of
see.
right. So a lot of people who say, "Oh gosh, I don't have $1 million in net worth," that means they're going to have to invest 150. Mortgages, from what we're talking about,
There really isn't a limit. It depends on who you're working with.
as low as 25,000.
10,000.
10,000.
Okay. Now, I mean, we're not out there raising $10,000 mortgages, but if someone comes to me and one of my existing clients says, "Oh, Carmen, I've got like 10 grand left in my RSP, and we just put out everything else.
Yep.
Can you put that into something else that you're working on?"
Sure.
Absolutely, we'll fit it in, right? So there really isn't a limit.
What if you have a locked-in retirement plan, a LIRA?
Everything is eligible. So RRSPs,
Yep.
okay, LIRA, RESPs,
All your education, right?
all of that,
Wow.
TFSAs,
Wow.
tax-free savings accounts. So you can use all of these type of things to invest in mortgages. It's brilliant. Okay, where you can't do that there, can you?
Got it.
So this is everything. Everything is open for it. And what's really enticing, that's great because being able to earn, 12, 8, 10, 12, 14, 16% on your RSPs,
Wow.
amazing, right? And you can just let that RSP grow and grow and grow.
And I think I want to touch on something.
It's amazing.
That you are going to be explaining this in greater detail on next Thursday,
Yes.
October 24th at the Sheridan.
Yes.
It's going to be a seminar. So we're going to be talking about using your RSPs to get 16 different
Yes.
percent. And it's going to tie in directly into private lending. So we're going to talk about that. But again, just to remind you that there is going to be a seminar that you can attend to. You can go to Carmen's website, profunds.ca, and get more information on that. Let's jump to the next question, which is, what is the regulatory body that governs all these transactions? I mean, you're not out there just taking people's money. There is something overlooking.
No, we're highly regulated.
Explain that.
Okay, so we deal with FSCO, Financial Services Commission of Ontario.
Okay.
Okay, so a mortgage brokerage, you have to be a mortgage broker to be able to sell mortgages or assist in placing mortgages.
Okay.
So anything to do with doing mortgages, you have to be registered agent or mortgage broker. Okay, and that is regulated by Financial Services Commission. So what we do, everything has to be exactly so. Okay, so there's a lot of rules and regulations that we have to abide by. So that does give the consumer or the person that's lending their money some extra comfort knowing that this is highly regulated.
So if someone were to call up Fiscal and say, "Hey, I want to check on what these guys are doing," they would know everything that you're doing. They would have an idea.
I'm thinking so.
I mean, they would know who you
I'm
are.
not sure. Oh yeah, for sure. I'm sure they'll know who I am.
Okay.
I mean, not
You're
not
licensed.
first name basis or anything, but yeah, we are licensed. Our company is licensed. We're a brokerage.
Okay.
And I'm a registered agent. Okay, so it is my company and the broker of record as well, Richard Hall of our company there. So everything is legitimate.
So they oversee and they come and audit you and they do all that kind of fancy
yeah.
stuff. Okay.
Yes,
All right.
yes.
So that answers question number 4. So number 5 is how can people out there become a bank? How does it work and how do banks make money?
That would be this slide here. So are we going to address that in the next one, or do you want to pull it up? Do we have time for that right now?
Well, you know what? How about we skip that then, because we
Okay.
are going to go to what we call the board, but in this case, it's going to be a bunch of slides. Well, let's
Yes.
jump to a little bit about perhaps explaining what a syndicate mortgage is, explaining the different types of mortgages that private lending can get involved in.
Yeah. So if you are deciding to get into private lending, let's say you have RSPs or you have some cash in any existing real estate, there are 2 types of mortgages that you can participate in. And, there might be one, for example, where we were talking about an individual that is an investor, in our case, and the type of stuff that we facilitate. They're looking for a first mortgage, perhaps, or maybe a second mortgage to top up on their deals. And we typically go to about 85%. Now, on some occasions, we'll go to 90 on an exception basis if the client is really strong, they're going to personally guarantee, and they have a ton of assets in their name personally. Okay, and that's another part of the discussion, because their security is not just the real estate, it's also the personal covenant.
Got it.
That they're getting when they're doing these types of mortgages, okay? So, they can get involved in that type of thing. Now, that is when one individual himself is registered on the mortgage, so he's committing to the deal. Okay, and I hear that.
You hear the
I hear that music.
darn, sorry, Carmen.
Yes.
Because explaining a syndicate, the differences between a syndicate and a regular, we're going to have to get into. We'll be right back on Your Money in Real Estate. Don't go away. We're not using the board. We're going to be using the slides. So Carmen, this is slide number 2.
During these slides, right?
It's in this order. Okay. So be the bank. That's what we're going to do. Yes?
Yeah.
Another call. Wow. You betcha. You betcha. Yep. Okay. You are watching Your Money in Real Estate, and we are talking about private lending and mortgages, and probably getting into some pretty complex financing structures. But and we're going to go through a bunch more questions, and Carmen's got how to go through a deal. Before we get to that, we have Mike on the line from Richmond Hill. Mike, hi, how are you?
Hi, how are you?
Good, Mike. How are you?
Fine, thank you. I have a question for Carmen, which I'm a little bit confused about. I understand her investments that she arranges are one-year investments for the investors, and you're dealing with a long-term asset such as real estate. So how does she work that out? Meaning, if people want to leave after 1 or 2 years, how is the investment funded after that?
Sure.
Or does she need a lot of investors to do this?
Absolutely. Every single mortgage request that we have has an exit strategy. Okay, so when we're packaging a deal, there is a structure in place when we present the deal. So my job is to find out, okay, how secure is the asset, what do you need the funds for, and how are we getting our money out? So in certain circumstances, they're selling the real estate. In others, they're actually buying real estate and then refinancing with the bank later. In other circumstances, they're just going to continue to renew. Now, if you specifically are in a one-year term and you want your money out after year 1, we would gladly replace it with a new mortgage. And the borrower is fully aware of all of that. So there's always an exit for everybody's money that's in.
But doesn't the paperwork become too onerous for the real estate investor?
No. I mean, we've been doing this for many, many years now, and I have several investors that would annually. So what happens is that 3 months towards the maturity of the mortgage, we will actually draft a renewal agreement. Now, first we have to ask you, the lender, if you in this case are the lender, and we would say, okay, Mike, are you interested in renewing your mortgage with this client? You would say yes. Okay, what would you charge to renew your mortgage here? And then we would draft the paperwork if it's an agreement with the borrower. And then what we do is it's just a matter of a renewal agreement. And everybody signs it. The mortgage stays on title. Nothing changes. You just renew on paper.
I see.
So it's really not onerous. It's a very common process
The only thing, just one final question.
Sure.
The only thing that's really an unknown factor or unknown variable for the real estate investor is that he really doesn't know what he's going to be renewed at the end of that term, right?
Well, in some cases, okay, we would say that the lender is in agreement to renew at the same rate, charging instead of a 2% fee, he charges 1%. If we know that the exit is not defined or not determined exactly, then what we do is we'll give the option to have a renewal in place at that point. Now, if indeed you are not willing to renew, and that's something that I discuss with each lender when we decide to do a deal. So this is all pre-discussed and determined on at the very beginning, so that we know what we're dealing with down the road in a year from now.
I see.
Okay, Mike.
Thank you very much. Then.
Thanks so much
you.
for the call. That was an excellent question. So if anyone else out there has some other questions for Carmen, it's 1-866-75-1010. Now, we're plowing through a bunch of these questions, and I know that the main thrust of this is we want to talk about how can you be a bank.
Right. Well, did you want to go back to the syndicated mortgage question? We were going through that before we went to break. Or do you want to do this?
I think we should do this because this is an important thing. So there's a slide up there now on the screen, and it's about how to be a bank, because I think that's really what private lending is you're going through how can a regular Joe become a bank. So why don't we go through a bit of that right now?
Yes. Okay, Mark. Well, if you would, I was going to call you Joe. Okay. Anyway, so if it's incredible right now. The rates, now people are thinking, oh my gosh, rates have gone up. In all reality, we're still able to get today 2.6% interest. Okay, that's a variable mortgage. Okay, so I am basing this scenario on that interest rate. I pulled it up today. It's something that I can definitely get. And I'm saying that if somebody has a house worth $500,000, and in today's market, there's lots of that happening because values have gone up incredibly. So it's an amazing time to take advantage of that. Okay, so we still have high property values. So $500,000 value on your real estate.
Okay.
We're going to refinance that today at 80%. That's the maximum we're allowed to refinance.
And there's that magic word, LTV.
LTV. So whether it's your own home, your house, owner occupied, or a rental property, 80%. Now, rental property meaning up to 4 units maximum, 80% loan to value. Okay? And that is considered conventional today. If you get into commercial property, that's a whole different ballgame. 75% is typically a refinance. Okay. So at 2.6% interest, and for me, I would take a 35-year AM because I'm not in any rush to pay down my mortgage, but I would do that, and it's up to the individual and their comfort zone. But I'm basing it on this. Okay, this is what I would do.
Okay.
A new mortgage of $400,000. Okay, so this is the new mortgage that we're going to qualify for.
Right.
Okay, so basically on these terms, we're looking at a $1,448 a month mortgage payment. Okay, on the $400,000. So this is your new mortgage payment. We're going to pay out your debt that you had, and I'm assuming it's $200,000 in this case. Okay,
so I just quickly want to summarize. You have a $500,000 home. You have an existing mortgage of $200,000.
Yes.
You're saying let's go in and refinance it at 80% LTV, loan to value, and your payment's going to end up being $1,448.
Yes.
Okay.
Okay. So now we are left with $200,000 to invest in.
Okay.
Okay, we're going to use that money to invest in mortgages. Okay, so keep in mind you were paying a mortgage payment on this $200,000 all this time, and I'm not sure what it would have been.
Right.
But let's just say you were making mortgage payments at that point in time.
Okay.
Okay, so we're on
now on page 2.
Page 2.
Page 2.
Okay, so this is a typical offering that we have in our company. And this is a development-based investment where we're yielding typically around 16%. It's on the higher end, not because of the risk factor, but because of just the type of deal it is, and it's able to pay that type of a return to our investors. Okay?
So if someone out there is watching right now and they're saying they have money, you're saying you can pay them as a private lender 16%.
A year.
A year, okay.
Okay, so I'm going to base this scenario on this structure because in these structures for this type of investment, 8% interest-only payments annually are paid monthly. Okay?
Okay.
So plus you get a lender fee annually of 8%, but that will come at the end of the mortgage. Okay? So we're going to base it on that. So 8% annual monthly payments to you. So you're going to be receiving 12 post-dated checks for $1,333 every month and 33 cents. Okay?
Yep.
So now keep in mind your mortgage payments are $1,448. So you're only paying $100 and something a month,
48, well, less, 100 and
every month
15.
On your mortgage now. When you were previously.
So let me say that again. So you take out that 200, you invested in that 16%, you're getting 1333, your mortgage payment is 1448, your net mortgage payment is 100 and change.
Yes.
Period.
Plus you have $200,000 out there working for you.
Okay.
Okay, so that will come back to you at the end of the term. So what happens is your mortgage comes back to you plus your 8% lender fee. Okay, so you're receiving, at the end of the term, you'll get your $200,000 back.
Okay.
You've received over the last 12 months $1,333, plus you're going to get an additional $16,000 that comes to you. So all in all, okay, this is a one-year term, you're going to make $32,000 on your $200,000. Okay?
In 1 year.
In 1 year. Now, also, you're paying back your principal.
That's
So
right.
I've incorporated here principal repayment. Now, I've calculated on an amortization schedule. I figured this out today.
Okay.
And I divided by over 5 years, it's about $7,500 a year of principal repayment. Okay, and I'm calculating this over 5 years.
Okay.
So all in all, if you take that into consideration, your return on investment is 19.75%.
If you include the
principal repayment.
Right, right.
It's enormous.
It is fantastic.
So it's paying off your mortgage that you just borrowed.
That's right.
And you're making great returns on your money.
So that, in essence, is how banks make their money. Or is it the same kind of system?
It's similar idea, yeah. Like, I mean, basically what you're doing is you're borrowing at 2.6 and you're putting it out and lending it at 16.
And I think that's the key.
Yes.
Is that if you have access to money, whether it's in your home or whatever, you can borrow it at 2 point something percent, 3%. You can take that, private lend it out at 16%, and obviously there's a spread, and I'll use that word, the spread, and that's how banks make money.
Yes, and I've written an article called "Making a Great Spread" on your property. So
we're running down time, but what's page 3 there?
Okay, page 3. This is a typical mortgage investment, like I said. For example, Annette that we were talking to.
Yes, Annette, at the very beginning. Yes,
we're lending her something.
So this is a different deal. This is not the 16%.
This is 16% on a type of a, let's say, development type project.
Got
okay?
it. And
this here is based on just you lending your money. The returns are lower. Okay, so we're talking about 12 to 14% on your money.
Okay.
Okay, but it's still phenomenal returns.
Absolutely.
And this way here, the structure is a little bit different. So you're going to be receiving 12% interest-only payments to you monthly. Okay, so you still have your $1,448 a month mortgage payment.
Okay.
In this case, at 12% interest only, you're receiving $2,000 a month in income from that mortgage investment.
Okay.
You're also receiving typically a 2% lender fee. Okay, so there's a lot more we could cover here, but that again, if they want to attend the forum, they should do that because
absolutely.
we can cover absolutely everything. But there's in this case, a 2% lender fee will be a $4,000 fee. Okay, so you receive a $4,000 fee, plus you're getting $2,000 a month.
So the person lending the money gets a $4,000 fee.
Yes.
Plus the $2,000
a month
in interest.
Interest only, and at the end of the term, your full $200,000 comes back to you. So every month, you're actually cash flowing $551 a month. If you borrow this money and lend it out, you're getting $551 a month plus your $4,000 in fees.
And I'll repeat that again slowly. If you borrow the money, you're still making a positive cash flow of
$550 a month.
And I know on this show we talk about renting duplexes and renting different things.
Yes.
Receiving $500 a month on a $200,000 investment. I think that's not
amazing.
bad.
Plus $4,000 up front. So if you take that $4,000 and put it into your monthly payments,
that's right.
There's even more money there. Plus you get your principal back, and you can keep reinvesting that money every year. So your principal repayment is happening here at the same time, just like the other one, and you're cash flowing some money. So this is excellent for people that, you know what, may be heading into retirement.
Sure.
And I know people are going, oh my gosh, I'm heading in retirement. I don't want to lose my money. But we would make sure they're in safe. We'll do our very, very best to make sure they're in the safest places possible. And that's all part of what they can do. So it puts people, when they're in the retirement stages and they're living on a very tight income, they've got some great money that they can live on. And I've done it for my mother.
And I know, Carmen, we talk a lot about, getting cash returns on your investment. We're going to get more into, we're going to have a few more questions, and we'll be right back on your money and real estate and talk about how you can get involved with private lending. Don't go away. Woodbridge. Okay. Well, isn't that? Oh. Can you move the hair from your eye? Welcome to the last segment of Your Money in Real Estate. This show is flying, even though I was given a list of 10 extremely important questions on what private lending is, because Carmen is that type of girl. She's extremely diligent on how things are done. And we've also had an enormous number of calls. So we have Frank on the line. Hi, Frank from Woodbridge. How are you?
How are you guys doing tonight?
Good, good. How are you?
Not bad, thanks. Yeah, I'm just wondering, who would take out the title insurance? Is there title insurance on these properties?
Yes, absolutely. Every mortgage we do, there is title insurance. So if there's two mortgages, a first and a second, we would have title insurance on the first and title insurance on the second mortgage.
And approximately, let's say on a home that you're lending out, what would the first mortgage, what kind of return could you be looking at?
First mortgages, you're dealing anywhere between, I'd say, typically 7 to 10%. Okay, and then you get a lender fee on top of that. Now, keep in mind, when you do first mortgage lending, you need a significant amount of money to deal with. So when you're doing a first, there's typically 100,000 plus.
And
when you get into
Seconds is...
first mortgages are that way, but when you get into seconds, you're dealing with a smaller amount, unless we put you together with a couple other investors.
Yeah, but let's say 100, 150, 200,000, you could have a first mortgage.
Yes. Yes.
And
Now
how
we'd
would
have
I
to
get
find
in
the perfect deal, but yes, there are the opportunities there.
And how would I get in contact with you?
You can actually contact, I'll give you my toll-free number. It's 888-330-3866.
3866. Okay, thank you.
Okay, thank you for calling.
Bye-bye.
Thanks for the call, Frank. And I think for some of you out there, the website information is on the screen.
Yes.
And also, more importantly as well, that you can come see Carmen and myself. We're going to be doing the seminar on this. Carmen's certainly going to be the star of the show, as she is tonight. I'm just going to be hosting, I guess. And we're going to get into that. But if you have any other questions, it's 1-866-715-1010. Now, I want to dig into these questions. We've covered a lot of material.
Yes.
But let's get into somewhat what Frank was asking is going from a deal from start to finish. And I think through that we can probably answer the three other remaining questions. But why don't you walk us through how a deal is done from the very beginning to the very end?
Okay. Well, there are, like I said, two different deals that we cater to in our company. So the first deal, let's start off with just a regular individual himself getting into a mortgage.
The question that Frank had.
Yeah. So let's say, for example, Frank's doing a mortgage and he's doing it for Julio. Okay. Julio is looking for a mortgage, and let's say it's a second mortgage.
Okay. And he needs $50,000.
He needs $50,000. So what would happen is the deal would come to me, okay, in our office. Now I deal solely with the private money. I make sure that I'm the only one dealing with the private money because I'm very picky about where the money goes and the type of information released to our investors, and that everyone is protected. It is critical for me.
Okay.
So when we do that, I receive a credit bureau. We'll pull a credit bureau. We'll get a mortgage application, list of net worth, assets. Now what?
On Julio.
On Julio.
Okay, got it.
So
Okay.
yeah,
Just want to get
not
the
on
numbers.
Frank.
Okay.
So Julio, I want to know.
Julio needs the mortgage.
Julio
Frank's
needs the
going to lend him the money.
Yes.
You bring the two
and
together.
I'm going to find out exactly what Julio's all about. Why do you
Got
need
it.
the money? What do you have in your personal name? Do you have any assets in your name? Is it in your wife's name? Well, I want your wife on that mortgage. So I'm going to do everything to make sure that we have enough security that can make sure my client is safe.
Got it.
Okay, so what we do is, appraisals.
Okay.
Let's say, for example, this is a refinance. So we get an appraisal on the property. If there's income, we want to see the income. We want to see the expenses. We want to see, okay, Julia, what's your situation with income? Now, his personal income. Now, a lot of our clients are self-employed. So, income is not going to be a huge factor, but it is considered in the whole big picture. If everything looks great, what happens is then I send it out to, let's say, half a dozen of my lenders that I know currently in funds, and I'll say, okay, we've got money, and then they say, yes, I'll take the deal.
Got it.
Okay, you'll take the deal. So what we do is we draft up something called an investor disclosure document, okay, and this is mandated by fiscal, and it's actually disclosure of the mortgage itself and all the details, okay? So the client will receive that. Then after they receive that, I can issue a commitment. I think it is 2 days later. Okay,
Like a commitment letter, just like a bank would do.
Commitment letter 2 days later. So we have a template of a commitment for our lenders. Now, in every single deal, a lawyer is closing the deal. The money's never come to our company. We are a mortgage brokerage. We do not handle the funds. We have it sent to a lawyer, so a lawyer of the lender's choice. If he has his own lawyer, we have lawyers we work with that we know are really great. But if they have their own and their comfort is there, we'll use them. And so all this documentation then goes to the lawyer.
Okay.
That would be the commitment and the investor disclosure. At that point in time, that's basically instructing a lawyer on the closing, and we will provide the lawyer with anything he needs. That lawyer then will contact the person borrowing the funds, his lawyer. And then the lawyers then exchange information, title insurance, clear title, registers the mortgage on the property, and then the funds are exchanged that way. Then on closing, there's 12 post-dated checks that will be sent to the lender.
Right.
And it's very passive, okay? Very passive. Now, if there is an NSF or something like that, we will definitely...
and that's probably disclosed of how NSF checks are handled and things like that.
Yeah, and we'll parachute in and get that done, and everything's good to go. Then that's typically how it goes. Now, when you get into a larger project...
Okay, so that was one very, like, what do I call
very
a home...
typical...
Right.
Average mortgage that we
Now
place.
we're getting into what we discussed earlier on that 16%, the more complicated deals. Let's talk a little bit about that, how those deals are done.
Now, those deals are great, okay? And typically, a single investor would never be able to get into something like this. This juicy and not that risky. It's just that the offering, the type of investment it is, because it's going to produce and generate some great revenues for the people borrowing the money, they can offer 16% on it, and they don't mind paying it.
Right. And typically we're dealing in the $2 to $3 to $5 to $10 million range.
Yes.
So that's where we get into that word, which I want to segue into, syndicate mortgages, so that multiple people can add their money till you get up to that 2 to 3. Okay.
And even in these smaller deals, we'll put a couple people together if need be. But in the deals that we do with the more complicated, we actually have developed an arm that does the due diligence for pro funds, okay? So that we can make sure, and they are very sophisticated, seasoned development people in the industry that can analyze every little penny and make sure that when I'm presenting something that the due diligence is done.
And that I just want to do a check mark here. So that is what is, like, in other words, what is the due diligence? And I'm sure that on these more complicated deals, there's a
third-party reports, appraisals, environmentals, let's say quantity surveyor, budget analysis.
So it's not just like a refinance on a home.
No.
You've got a whole series of
reports and due diligence. And there's a lot of companies out there that raise capital for this type of thing.
Right.
But I could say we pride ourselves on the amount of due diligence we do and the actual input we have on the project on an ongoing basis.
Right.
So we're involved. We're making sure that things are going the way they should go. Because there's sometimes when you don't, and in projects like this, things could go sideways. You don't know.
Yep.
And this way, we control things and we know things are happening in a favorable situation for the investor. So we don't control 100%, but we have reportings going to our clients and things like that.
When someone investing in these more complicated deals where due diligence is required, can they say, hey, you know what, I'm an engineer, can I see the environmentals reports?
Open book, transparency,
Wow.
we love it.
Wow.
That's what I want. I want people to say, so what we do is we put together the MIO, as we were discussing
Mortgage
earlier.
investment offering.
And it is pretty detailed. It outlines everything, okay? Who the parties are involved, their experience, the values of the real estate, and back to that question about construction financing and how loan to values grow, because I was saying that's where this would come into play, right? So, and that's another whole huge topic, and I don't know how much time we have.
We've got 2 minutes.
Right, so I'm not even going to go there.
Okay.
So that's how that one, so we present those to our investors, and they have the opportunity to say, yes, Carmen, I'm going to reserve this spot. I'll allocate 50,000, 100,000 from my RSP, from my cash, whatever it may be, and then we put together the agreements, and there are several agreements to protect the investors, okay, and it's all closed through a law firm again. Nothing comes through to us. It's all done legally.
So in many ways, a syndicate mortgage is probably on the bigger ones because there's multiple people.
Yes.
The paperwork is similar, but the due diligence behind it is on a much greater scale because
Yes.
we're dealing with, and is there, I know the word mortgage administrator, there's a mortgage administrator on top. So in other words, it's not just a regular mortgage broker, there's a special type of person involved that
So actually with the mortgage administrator, that entity there in which we have
regulated by Fisco,
allows for that company then to make the payments, collect the checks, so it's a lot easier for the people borrowing. They don't have to cut 500 checks on a closing, right? Everybody. So we're writing the checks to everybody through our office, so it makes it a lot more convenient, and we have control.
So Carmen, I am proud to say that we have answered all 10 questions, and we got a minute left. And why don't you tell us a little bit about the seminar, because I know that I have.
Okay, so yeah, we actually have a seminar coming up on the 24th. That's next Thursday. And every time we have them, the room is full. Like, there must be at least 100, 150 people in the room. It's definitely worthwhile coming because we have a panel. We have a lawyer who practices a lot with us in the syndicated mortgages. We have an accountant who can answer any kinds of questions with respect to how to deal with the income, and that's a great problem to have that you're going to be generating from this investment. And then we have the administrator, the mortgage administrator, that will be speaking there as well, and myself. And it's a Q&A, and we're going to go through every single detail. So it's a open Q&A room, and then afterwards hors d'oeuvres and
Socializing,
schmooze.
networking, 7 p.m. next Thursday, October 24th. You can see Carmen there. At the Sheridan on Dixon. We look forward to seeing you there. It's been a fantastic show. Carmen, thank you so much for coming by. And we'll see you next week on Your Money and Real Estate. Thanks so much. Bye-bye. I got the information on Savoy. I'm going to call the